I'm John Hanna for CityTV.net here in New York City, and we have Greg Womack, President of Womack Investment Advisors, joining us from Edmond, Oklahoma. Good afternoon, Greg.
Good afternoon, John.
How are you doing today, sir?
Well, I'm doing great. Just
Yeah.
got off a week's of vacation and trying to get back in the swing of things.
There you go. That's nice. That's nice. So what do you have for us today?
Well, we the markets. I mean, last week I was on vacation, but just watching the markets and you know the slowing economy, both here and abroad, have brought back the investor pessimism. And that was pretty much last week. It really got hit on the chin, especially on Friday. We had the disappointing employment report, gave equities the worst day of the year at a loss of more than 2%. So that last week left the Dow and the Russell 2000 in negative territory for the year. However, only down just under 1% on the Dow Jones and about 0.5% on the Russell 2000. However, the Dow's 8.7% loss since its year-to-date high in early April is better than either the S&P's almost 10% slide in the same time, and the NASDAQ and Russell's 2000 declines of 12% and 12.8% respectively. So the recent flight to quality turned into a stampede, sending the 10-year Treasury yield to a record low level. Demands push up the price on the bonds, and the dollar strengthened against the euro, was below 1.24 by week's end. Oil also plunged to just over $83 a barrel. So I mentioned the Dow Jones just under 1% loss for the year. As we speak today, which is June the 4th, 4 p.m. Eastern Time, basically the Dow is off about 17 points and the S&P's flat for the day. So these numbers will ring true for the year. Dow Jones just still under 1% down for the year. Lost all of its gains it had made earlier. S&P's up about 1.5%. The big news on Friday was jobs. Only 69,000 new jobs were added to the economy in May. It's the lowest number since last May, and it nudged the unemployment rate from 8.1 to 8.2%. The Bureau of Labor Statistics said the increase, the first in 11 months, is partly the result of more people once again seeking employment. And the job numbers for March and April were also revised downward, including the number of underemployed and discouraged workers would put the unemployment rate at 14.8%. So it's all about jobs. The market knows that, and that's why I think we had this sell-off last week. And so the economic growth was even slower the first quarter of 2012 than the 2.2% initial estimate. The Commerce Department revised their figure for the gross domestic product, came in at 1.9%. This was quite a bit lower than the previous quarter's 3%. And consumer spending did pick up 2.9% in quarter one, but business spending was off. So we also had some discouraging overseas economic data, and it contributed to last week's anxiety. According to the Eurostat, the European Union's statistical agency, unemployment in the Eurozone hit its highest level on record, 11% in April. Also, surveys of purchasing managers in both China and Europe indicated either virtually flat growth or actual contraction. And then we have real estate. Home prices in the 20 cities measured by the S&P Case-Shiller Index were up 0.1% in March, the second increase in a row, although they're down 2.6% from a year ago. Interest rates, John. Freddie Mac said mortgage rates last week hit a low not seen since its beginning. It began keeping records in 1971. The rate on the 30-year fix fell to 3.75. It was 4.55 1 year ago. And the 15-year rate fell below 3% for the first time to 2.97. John, this is a great time to be refinancing. If you haven't refinanced in a few years, now's a good time. And also a great time to buy a home, too. So good prices out there on homes and also record low rates. U.S. manufacturing growth continued to slow For the Institute for Supply Management Index, it fell to 53.5 in May from April's 54.8. But any number that's over 50, John, represents growth. The Commerce Department said April construction spending rose 0.3%, was up 6.8% from last year. The 2.8% growth in private residential construction was responsible for most of the April increase, and public construction spending was down 1.4%. As we look ahead to this week, John, central banks both here and abroad may be in the spotlight. With the approaching expiration of QE2 at the end of June, the Fed's Beige Book report will be parsed to see whether it might make a case for an additional monetary stimulus. And the European Central Bank is one of 4 central banks meeting on interest rates. And then we have data on GDP for both the Eurozone and Japan will also be released. So key date releases are factory orders on the 4th, U.S. service sectors on the 5th, labor production or productivity cost in the Fed Beige Book report on the 6th, and our balance of trade on the 6th as well of June. Looks like a pretty busy week for a summer month, beginning unofficially of summer. And so who knows? Sell in May and go away. It's kind of got off to that start, but here we are in June, and the markets seem to be still concerned about all the slowing economy in the Eurozone and China and everything else. Only time will tell. I think it's going to be a stock picker's market throughout the summer as we continue to deal with some of the geopolitical events in our world.
Alrighty, that's Greg Womack, president of Womack Investment Advisors, joining us from Edmond, Oklahoma. And I'm John Hanna for CDTV.net in New York City.